Management at Astral Poly. The CFO is now with us. Thank you so much for taking out time for us, sir. You had a conference call after your numbers where your volumes are looking in healthy, but more importantly, you are overall expanding your portfolio product to offer to similar customers. So can you just tell us which segments do you see synergy on and how do you expect things to move ahead?
So I think recently we have entered into the water storage tank. As now, shortly we are going to launch faucet and sanitary ware, which is we have a launch party on 10th of June. So that segment also, and we have acquired a small paint company having top line of 215 crore rupees with a healthy EBITDA margin of 15%. So I think these are the three different segments in which we are now entering. And more or less our dealers network is common. So that is why we are entering into this segment.
In terms of home care, home furnishing, how do you see this market shaping up? Do you think after 3 years of continuous lockdown or things not being the way they are, you expect a normalized demand here this year?
Yeah, we are already growing in this COVID period. Also, you see our company has grown up at a reasonable pace, I can say. Last year, you see our top line has grown by 38%. So this is not a small growth. When the industry in a volume terms was degrowing in FY21 by 16%, our company has grown by 4% in volume terms also. Current year also, we are expecting the industry should be hardly any growth, 1 or 2%, while our company has grown in volume terms by 10% and volume terms by 38% because of more of inflation was there. So I don't think as a company, Astral, we have any issue of the growth. In this tough environment also, we have grown. So there are high probability that now the economy is opening up. So we will be growing at a reasonable pace.
Margins due to inventory losses, will there be margins over the next 2 to 3 quarters? They have been softer due to the volatile PVC resin prices.
So you are right that whenever the polymer prices are dropping, at that time you have to incur some loss on your inventory. So because of that, you feel that the margins are under pressure. But as a business, we feel that the prices are coming down. It is always good that we will be able to grow our volume fast because the product will be affordable and our customer can afford these products. Whenever prices are too high, it is not good for the industry per se. So it is good for the long term, maybe 1 or 2 quarter margin may be under pressure, but for a long term industry, it is always healthy.
And given that Grasim now has very aggressive plans for their paint segment, how are you looking at grabbing any sort of opportunity in light of this?
So I said that we are going to focus only on our network. And on our network, we are confident that we can easily grow this business at a 15-20%. We are already having some base with us. This company, JM, which we have acquired, this is focused on the South India market. And Astral is having a presence pan-India. So now if we open up the 3 other zones, we are of the view that we can easily grow this business at a 15-20% CAGR because the base of this company is still very low. 200 crore business is not a level we can say. And the market opportunity of paint industry in India is close to about 55 to 60,000 crore. And in another 5 years, it is going to touch close to about 1 lakh crore market opportunity. So under that market opportunity, even if we get 1% market share over the next period of 7-8 years, then itself will be 1,000 crore kind of opportunity. So I think we are going to grow at a slow pace. We don't want to go aggressively or we don't want to burn any cash for these businesses. At a natural pace, only with our dealers and distribution network, we will try to grow at a 50-20% CAGR.
Planning to launch faucets and sanitary ware, that's going to be in the pipeline. So what kind of demand, what kind of revenue potential can we expect? What's the capex being utilized for this?
I think sanitary ware is the asset-light model at this stage because we are going to outsource these products. And over a period of time, we may enter into the manufacturing of faucet. But sanitary ware will be long-term outsourcing model only. So I don't think this business requires too much of capex. So capex will be very light in this business. As far as the new businesses outlook is concerned, I think we have already given in our presentation in our analyst meet also that we are expecting 1,500 crore rupees of revenue from our new businesses over the next period of 5 years. So that is what we are expecting. This include valve business, sanitary ware and faucet business, tank business, you can say paint business. And then recently we have introduced a very good product, Drain Pro, which is going to replace the traditional PVC pipe in the system for the drainage application. So these all put together, we are expecting all this new product is going to contribute 1,500 crore revenue over the next period of 5 years.
Astral Poly has time and again shown itself the way it can grow on a CAGR basis. Now, this time around, after a long time, you have had a lot of verticals which you are focusing in on, maybe extension of what you have already created. Which out of these verticals do you think will be the initial part of the growth phase?
So I think we have just started that journey. So I think we have to wait for some time. Well, unless until you don't enter and understand the market in detail, it will be too premature to say that which will be growing fast and which will be slow. I think history you can see whatever the new vertical we have entered, we have proven ourselves that we are slowly and steadily we are growing. Like ADC, we entered in 2014 with 250 crore rupees acquisition of two companies, and this year we crossed the 1,000 crore mark. So we are not in a hurry, but we want to grow at a consistent level. That is the philosophy of our management. Whatever we want to do, we want to maintain the consistency to that. That is why we are saying that we will be growing at a 15% CAGR. Even last year also, if you see our presentation, we have given a growth guidance of 15%, but actually we deliver 38%. So we always want to grow at a consistent level, but whenever the market will give us the good opportunity, so we will not shy away to grow at a higher pace also. And that is what we have demonstrated in our last 10-year journey. That whenever the market gives us opportunity, we always try to gain at a higher pace. And you see in this difficult time also, we are gaining the market share in all our existing products. Whether it is the pipe, whether it is the ADC, whether it is the tank, everywhere we are gaining the market share. So that gives us the confidence to the management team that we can do better in the coming time for our new verticals also.
All right, sir. Got it. Thank you so much for taking out time for us. All the best with your new verticals and sharing with us what you shared with investors in terms of an outlook on the call.